This is what we call the investor's checklist. It is a series of 5 questions that, if you're able to answer, it will put you in the best possible position to receive funding for your business idea. So the 5 questions here, and Bruno, you're going to do a lot better job explaining this. First is, what is the problem being solved? And for this, it has to be more than just something cool or trendy. It has to be able to solve a pain point for the consumer. A good example of this was the failure of the Segway, which was those things that you see in the mall. And the guy who started that famously said that one of the most painful truths for an entrepreneur is knowing that the success of his company is not dependent on the quality of the technology. And that's something that is very true. So make sure that that you're able to convey that this is not just something cool and using machine learning, but this is actually going to solve a pain point that industry really needs to address. The second item on the checklist is this solution innovative? And innovation is not just different, but it is doing something differently in a better way. Change with value, as Bruno says. The third thing is the customer willing to pay for it? And the best proof you can have for this is to have sales. Oh, you can't beat that. If you have sales, that's market validation right there. If not, there has to be a lot of proof and documentation, be it surveys from customers, market research, or any sort of market validation that you have handy that you can really convey and present to the investor to help gain their confidence that there is a customer in a market that is willing to pay for this. The fourth question is a very important, probably the most important one, and it basically is this capital efficient? There's 2 components to this. The first being, is this business scalable, or is it cost? How much does it cost to grow? As an investor, they want to make money on this, and if there's a lot of variable costs, it's not going to be very attractive. So being able to convey that and spell it out will really help gain the confidence of the institutional investor. And then the next component of that is, what are the margins, or what is the potential for positive cash flow? And then the last question is another one that is very important to be able to address, and that is, what are the barriers of entry to prevent new entrants? Usually intellectual property, things like patents and trademarks, are good, but it's not always feasible. They take a while to obtain. And if it's something that can't be obtained, there has to be a different manner in which you are able to convey that. So some of the things that they want to, venture capital is going to ask is, how likely are fast followers? How likely will a big company pivot and kind of mirror what you're doing? Also, you want to convey what sort of unique advantages you and your team has that will prevent new entrants. For example, corporate culture or contracts already established with customers. So those things are really going to play a key in being able to obtain outside funding.